The latest numbers have been released for September 2023. The market has officially shifted, with the number of sales down, the listings up, and this being the third month in a row that we're seeing a drop in the average sale price. In this video, I'm going to talk about what's happening with the Durham Region real estate market and how it affects you as a would-be buyer or seller or a homeowner. If we haven't met yet, my name is Vilija Truelove. I'm a local Durham Region real estate agent with almost 20 years experience. All my contact information is included below. Reach out anytime through email, text, or phone. I'd love to help you with your move too. So let's start by looking at some important numbers. Months of inventory for September was at 2.5 in the Durham region. Months of inventory is the amount of time or months it would take for all current MLS listings to sell, given that no new listings enter the market. And this is calculated by dividing the total number of homes for sale by the total number of homes sold for a given period of time. In August, we were at 1.8 months. This number also does differ depending on where you're looking. For example, Pickering has 3.5 months, Oshawa 2.3, Clarington is still only at 2 months. So things will feel different depending on where you're looking. Most places would say you're in a balanced market when you're between 3 and 5 or 6 months of inventory. So technically, we're still in a seller's market according to months of inventory in many areas, but balanced market in others. Sales to new listings ratio is another number we can look at, which divides the number of sales by the number of new listings. This month, that number is 37.8%. Typically around 50% is considered a balanced market. Going lower is getting into buyer's market territory. Higher is seller's market. Overall, it seems that though it isn't perfect, months of inventory is thought to provide a more accurate view of the market than the sales to new listings ratio, but they're both good to look at. We saw 1,727 new listings in September. That's up from 1,526 new listings in August. And comparing that to a year ago, we had 1,194. So a huge jump from last year. There were 653 sales in all of Durham Region in September. This is down from 776 in August. And comparing this again to September 2022, we saw 662 sales. So not too far off where we were a year ago in terms of sales. Of course, as I mentioned, the number of new listings compared to last year is a lot higher. So that's where we're seeing the big change. Days on market is up just slightly, but still very reasonable. It was 15 in August, and we were up to 17 in September. And sale price to list price ratio is still at 102%. So most sellers are getting at or over their asking price. It was at 103% in August. If you're a buyer, you will notice a change in that more and more sellers are choosing to price where they feel the value lies and not setting an offer date, but taking offers anytime. Also, the homes that are selling over asking are often seeing just a little over asking. We're not getting 100 or 200,000 over asking as a typical anymore. Now, something else to note, these statistics are for homes that have sold. They don't say anything about the listings that have been terminated or the current ones that are sitting on the market not selling. We are seeing a lot more of that, and those are other important things to look at when you're trying to price a home to sell or to buy. Now, the number most people want to know about, price. The average price in the Durham region is down for the third month in a row. We're at just over $907,000 for all home types throughout the entire Durham region. This is down from just over $930,000 in August, so a drop of just under $24,000. The prices have dropped from the high this year of just under $1 million in June. A year ago at this time, we were just over $915,000, so we are about $7,668 less than this time last year. Now, detached homes have actually not seen that drop. The average price of a detached home in September was $1,018,765. That's actually up just over $3,500 from August. And when you compare it to September last year, we're actually up over $16,000. So detached homes are holding their value better right now. Of course, all of this might make it sound a little bit like the sky is falling. So let's put all of this in perspective as well. Yes, we are less than we were a year ago overall, and prices may continue to come down. No one can say for sure what's going to happen. However, for anyone watching that's owned their home for 5 or more years, here's some positivity for you. The average price of a home in the Durham region in September 2018 was just over $587,000. We continued to increase pretty dramatically year over year until 2021, when we reached our peak of just over 968,000, down to just over 915,000 in 2021, and now we're at just over 907,000. So, as most people know, the real estate market is always going in cycles. So, even though we're down, we have seen an increase in the average price over 5 years of over 320,000. Real estate should ideally be held for the long term, and in most cases, if you can hold on long enough, you'll come out on top. Right now, we're seeing the impact of high borrowing costs and high cost of living, high inflation, uncertainty around the future Bank of Canada decisions, and just slower economic growth in general. So a lot of buyers are nervous. But people do buy and sell homes in every market, every day of the year. They really do. So why would you even want to buy or sell real estate with this uncertainty? Some people have to sell, a job change, a separation, any number of reasons. If this is the case for you, hopefully you've been in your home long enough to have built up some equity. Unfortunately, there are some sellers that will be in situations now that bought during the peaks in, say, 2021, that need to sell now, and their home is worth less than they paid for it. There will be some people in trouble. If you're one of those people, I would suggest looking into every option to try to keep your home. Don't run away from the bank. Call them and see if they can work with you. With the current rental prices, maybe renting out the home will be an option for you. Some people will still choose to sell. If you've completely outgrown your home and are bursting at the seams, it could be easier for you to make the move into your dream home in this type of market than in a crazy seller's market. Of course, you'll get less for your home, but people typically buy and sell within the same market. So you will also pay less for your new home, and you'll have many more options and likely not have to worry about multiple offers. I would suggest in just about every case that you sell first so that you know exactly what you're getting for your current house. If you're selling, the home's presentation and marketing needs to be on point. Staging, professional photography, and online and traditional marketing, and pricing will be the most important factor. If you don't price correctly, you're likely to sit on the market. You want to make your home the undeniable choice for buyers. Make it hard to say no. For people going from a rental into a home purchase, there are some important things to consider. I've spoken to a shocking number of people recently whose landlords are kicking them out to move themselves or family members in. Yes, it's very suspicious how often it's happening right now. But the fact is, many people don't want to deal with the hassle of the tribunal, and so are now left looking for a new place to live. So if you're in a rent-controlled apartment that you love, maybe this is not the best time to buy. But if you're now looking at paying a crazy amount in rent, here are some things to think about. First, know how long you plan to live in your next home. If you plan to live there for more than 5 years, then moving forward with the purchase could be an option, since it makes more financial sense over the long term, where you could see rates drop again to refinance. If you're not sure how long you plan to live in your next home and it's not urgent, then it could be better to wait to see if rates and or prices decline in the next few months. Though no one will be able to predict when the bottom hits. Next, you need to feel secure with your income, credit score, and general financial situation. If you have a stable job, steady income, and a good credit, and a down payment or money in RSPs that you can use as a first-time buyer, then it might make sense. Third, focus on your monthly payments, not necessarily just the interest rate. Prices are down, and you likely won't be competing with other buyers. That means even though interest rates are higher than they were last year, your monthly payment could end up being about what it could have been when rates were lower. And then, of course, you need to compare what you would pay in rent to the mortgage payment. What's better for you, a higher rent or a higher mortgage payment? Rising rents have made it tough on renters, so think hard if you want to get into the market sooner with your own home. There's lots to consider, and everyone's situation will be different. I would also add, as a buyer, you don't need to make any rash decisions right now. Take your time, look at the numbers so you can make the best decisions for you and your family. This is not a market for everyone to buy and sell in, but if you need help with your specific situation, have any questions at all, reach out and let's see how I can help you. Thanks so much for watching.